Hello traders and welcome to another video review. Today is Wednesday, August 17th, 2022. Let's take a look at the Forex calendar. The key event of the Asian session was the Reserve Bank of New Zealand interest rate decision, and in line with the expectations, the Reserve Bank of the New Zealand hiked the interest rate from 2.5% to 3%. So we will definitely take a look at the New Zealand dollar later on. Press conference, of course, took place at 5 o'clock. However, these two events were the most important events overnight. During the London session, we got only the CPI data from the United Kingdom that had been released already. CPI increased from 9.4% to 10.1%, which is more than expected number of 9.8%. So the consumer price index in the UK is rising rapidly. During the New York session, we got plenty of data that are very, very important. We are going to start with the core retail sales and the retail sales data scheduled for release 2:30. As you can see, the market participants expect the drop from 1% to minus 0.1% in core retail sales. Crude oil inventories scheduled for release at 4:30 will be one of the very important events as well. And of course, the key event of the week, I guess, is the FOMC meeting minutes scheduled for release as usual at 8 p.m. So plenty of data, plenty of very important data during the afternoon and the evening today. So please stay focused, stay vigilant. This kind of a data might influence the market behavior. So let's jump to the technical part, and we are going to start with the New Zealand dollar. Daily time frame chart of the New Zealand dollar versus US dollar is showing us a very nice breakout to the upside. From the lows of 6,056 to the recent high at the level of 6,464. So this is almost over 400 pips. We have an increase of 6.72%, and this increase, this move to the upside, is the biggest movement during the downtrend. So from the highs of the 5th of the April 2022 to the lows of the 14th of the July 2022, the recent movement up is the biggest correction to the upside. It is probably the beginning of some new cycle, because we clearly have the price and time over balance. The market broke above the orange trend line, which is another bullish clue, and broke above the 30-day moving average, tested it several times, and then lift off towards the level of 6,526, 6,571, which is last bounce high, and now it's of course the supply zone made from these two technical resistance levels. The recent high 6,464 didn't actually hit the technical resistance. However, as you can see, we are on the way to do this. Bearish engulfing pattern for now doesn't actually help the bulls to rally. However, we are testing the 6,332 level after the bearish engulfing had happened, and we are still inside of this channel here. Let me just adjust the channel correctly. There you go. So as long as we are above the trend line, above the 30-day moving average, inside of the channel, and the momentum remains positive, then of course the outlook remains bullish. Target supply zone, these two levels is the supply zone. So please keep an eye on this level, because bears might be much more active when we get there. So that's the New Zealand dollar. Let's take a look at the British pound after the data. So what's happened after the data? Well, it looks like, let's switch to the 4-hour chart. It looks like the British pound doesn't actually care about the CPI. It might be all in the prices already. However, we got a slight bounce from the key technical support at 1.2003. We almost hit this level. Low was 1.2006, so only 3 pips away. We got nice bounce here. Let me just find out how much did we actually retrace of the last wave to the downside. I guess around 50%. There you go, 50% exactly. 50% retracement, 1.2140. Right now we are forming the kind of a pin bar, might be a shooting star, maybe even a doji, because this candle has not been closed yet. However, it looks right now for like a down candle, a red candle. If not this level, then 1.2161, 21 pips away from the 50%. If not this level, then 61% of the Fibonacci retracement at 1.2172 might be the last level for the market participants to hit before the drop will continue. Any breakout below 1.2003 will accelerate the down movement. So please keep an eye on this level. As you can see, I got my blue arrow here. It might be very, very important to see what is going on after this. This level is violated. Let's find out what's going on the US dollar index as well. What is going on here? Let's switch to the daily. Daily time frame chart has a very interesting candlestick pattern. What do we have here? We have a shooting star doji pattern, just a little bit too much body for a perfect doji. However, I think that this might be important. This might be important candlestick. This is daily time frame chart. This is the 30-day moving average. As you can see, we broke above the trend line. Right now the outlook remains bullish. Okay, we broke above the trend line. Little bit of resistance at the 106.66 where the actually 30-day moving average is. We didn't hit the technical resistance. 107.26, 107.45. So that's the technical resistance zone. However, if today's candle is red, we have a confirmation of the reversal, and we should expect the market to break back under the trend line, and will hit sooner or later the levels where the lows are. The local lows are around 104.462. So this is the low from the 10th of the August 2022, where my let me just move it. There you go, where my blue arrow is again. Momentum barely positive, so this might be a fake breakout. Please consider the fact that this might be a fake breakout. We are waiting for the confirmation. We are waiting for the market to react on this kind of a candlestick. This is a doji pattern, so that might be kind of interesting. And last but not least, let's take a look at Bitcoin. We didn't look at this for quite some time. What is going on the daily time frame chart of the Bitcoin? And we are still inside of the channel. We pointed out many days ago. This is the corrective channel. Let me just settle down. There you go. This is a corrective channel, so the market is still below the key technical resistance around 25,367. It's been pushing away from it, pushing away. We got bearish engulfing, another bearish engulfing. We got the pin bars and stuff like that. But the bears didn't broke below 23,596, which is the nearest technical support. Didn't retrace much as well. We got the retracement level here, so we might see big breakout above this level. And if we do, if we break above 25,337, just where my blue arrow and blue level is, then the outlook might be bullish for a longer period of time, if it won't be faded. So we need a strong green candle like this or like this on a daily time frame chart of Bitcoin to confirm the breakout. Otherwise, consolidation will take place for longer period of time. That's everything from me for today. Thank you very much for watching this analysis, and I hope I see you guys next time. So take care and bye bye.